sort of lagging its communication, its consumer staples, as well as real estate in some pockets here. But the ones that we would like to see catching a bid, communication services, technology, even financials for that matter, are actually doing a pretty decent job early on to start the day. To the upside, I'm looking at 68.30 as your major area of resistance, at least for now. That actually has a little bit of confluence from this area of resistance that we had back on November 5th here, where we did see some selling pressure coming into effect. We are above that 200 period moving average on the 15-minute chart. That's also been a key area of resistance as well as support over the last couple of months here. Right now we are breaking above it, and if we do see any type of move to the downside, testing that area of support, that 67.90-ish area, could be your first area where buyers early try to step in. If not, 67.60, first major area support, if we break below that 67.30. So we are seeing obviously a little bit more of a bullish trend because of the government shutdown news. There was also some other stimulative measures that were announced, pre-announced, let's say, from President Trump over the weekend as well, stimulus checks, 50-year mortgages, and things of that nature. So you are seeing some buyers really stepping in. And what you want to see from an options flow front, you want to see those puts that were bought pretty much Wednesday, Thursday, Friday of last week, those puts being sold out of the market. That would actually force dealers to buy futures contracts, pushing the prices even higher for the S&P 500. So technically speaking, we're holding up pretty well here. A pretty decent day on Friday, seeing some follow through today.
And how about gold? I mean, we're seeing gold up $80 today. What are folks saying about that, and what are you watching?
Yeah, for gold, you're still seeing this risk-on tone when it comes to gold. If the equity markets are seeing risk-on, gold is also seeing the same type of reaction here. This also could be a situation where the market is probably pricing in hotter inflation for now, debt obviously being probably readjusted to the upside when it comes to the U.S. government, but you are seeing buyers really step in. Gold's up around 2% so far in today's session, hitting the 20-day moving average. It's going to be an area of resistance. We're pretty much testing it right now, but if you look at that MACD at the bottom of that chart, it is trying to hinge at a bullish formation where the 12 EMA could potentially overcome the 26 EMA. That's actually bullish, and you'd like to see a move to the upside here. Last but not least on this chart, we have this trend line that pretty much was developing since August. We saw a breakdown of that trend line. Could we see an area of support, previous support, turn into an area of resistance? That could be possible, but that also then brings you back to those highs of around $5,400. So risk on when it comes to gold for now. Let's see if this actually does last year, Nicole.
All right, Kevin Green, great to see you. Thank you so much. All right, it's time for our market meetup panel. Jenny Horn, Joe Mazzola, Director of Trading Services at Charles Schwab. Great to see you both. Joe, I'll start with you about this week ahead. Some of your thoughts.
I think a lot of it started, last Friday when there was some at least talk of a deal that might get done with the Senate Democrats. You saw the turnaround towards the second part of the day, and it wasn't just a kind of a snapback in technology. It became a little bit more broad-based. I noticed as you kind of headed into that close, the advanced decline for the week, not just the day, but for the week, kind of got back to 1-to-1, where it had been, 2-to-1, 3-to-1 decliners, basically all the way up until those last couple hours. So not only was it a snapback in technology, but it became more broader-based. We see that kind of carrying forward into today. And yes, the higher beta technology, communication services, they're leading the way. But you're seeing it across many of the sectors, and it does look like there's a risk-on sentiment right now, Nicole.
A lot of it, I see the flag up here, 250th anniversary of the Marine Corps, and we have a lot of servicemen and women here today. I had a Veterans Day tomorrow, so wanted to acknowledge some of the applause and things that are going on here on Wall Street. Jenny, some of your thoughts.
Well, I think that I know we've tapered off a bit as far as some of the earnings momentum is concerned, but I still think that this has been a pretty historic third quarter earnings season thus far, and we set up the week on a pretty strong note here as we're, of course, green across all of our Max 7 and the UK4 major averages. But, for example, so far, 91% of the S&P 500 companies have reported, 82% of them have seen earnings beats, and about 77% have beaten revenue estimates. So as far as the third quarter growth rate, still tracking to be strong, but hugely, the reaction has been actually fairly underwhelming to the downside, where we saw really nice reports from, say, names like McDonald's, Rivian, AMD even, but then a lot of that strength given back in the following session. So it's been a pretty still strong report from across the board. High valuations have still been a pretty major concern, but I think you have to consider the fundamental analysis of what we're seeing from these companies, and that has been, we are still in a very strong market as far as these large tech and large companies, earnings reactions just haven't necessarily depicted that quite so well this quarter.
And Joe, thank you, Jenny. And Joe, look, we're with the 41st day here on the government shutdown. Looks like we're moving ahead to end it. As you noted, some of this really started on Friday. We'll start to get that data. We didn't get our jobs report on Friday. That was key. Some of your thoughts going forward now, how the environment could change, or maybe for trading. I know you have the stacks report. We'll wait for data. Thoughts here now. What might change in the next 7 to 10 days?
I'll start with the 7 to 10 days, but maybe broaden out a little bit. I think getting some of that economic data over the next couple of weeks will help. I think that'll provide a little bit more consumer confidence. I think that was a big issue on Fridays when we got the University of Michigan consumer confidence or consumer sentiment number looked pretty dismal. So I think that's part of it. I think the other thing is too. There's a couple other things that could put us back on track to a higher end of the year move. Basically, number one would be this. Retail has really led the way in terms of this rally since April. We haven't seen as much commitment from kind of the institutional side. It's been spotty along the way. I think Kevin mentioned beforehand a lot of the hedging activity that occurred over the last couple of weeks. You're starting to see some of that unwind. You might see a little bit of that catch up, some of that window dressing as we go towards the end of the year. The second thing I would keep an eye on is buybacks. Now that we're kind of making our way out of the earnings season, you're going to start seeing a lot of buybacks occurring within some of the larger companies, which could give another leg up to this market. So those are two things I would keep an eye on, in addition to maybe some of that boosting consumer confidence and investor confidence as we kind of move past this government shutdown.
And Jenny, I'll give you the last word. I know you were talking about some of the semis and more final thoughts here.
Well, I do know that there's been a lot of focus around Taiwan Semiconductor reporting a pretty substantial pace of slowdown for the month of October. What that means for the broader AI trends. We have NVIDIA earnings November 19th, so we still have some time before that. But there's been a lot of fears. I think those that are trying to poke that bubble and really call it a bubble for AI momentum. But I would say that you still have so much to like, and you've seen a lot of this from sort of the second, third tier AI players that have reported, again, really strong financials for this past quarter. So showing AI is still hugely intact.
So look, I'll tell you right now, you're seeing tech, communication services, also utilities, healthcare higher, consumer discretionary. Not everybody expected healthcare to be higher. So market breadth is looking pretty good. Jenny Horn, Joe Mazzola, great to see you on this Monday. Stocks bounce back after Friday's sell-off. The government shutdown looks like it's ending on the 41st day. A lot of earnings. We got you covered here on Schwab Network. Morning Trade Live next.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com. Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
Welcome to Morning Trade Live. I'm Sam Bartis, live from the floor of the New York Stock Exchange. We've got plenty to hit on both here and abroad over the next hour. So here is a look at what is coming up on today's show. We could see light at the end of the tunnel. The Senate passing a measure over the weekend that sets the stage to end the government shutdown. We'll examine what that means for markets over the next few weeks. We'll highlight today's weakness for health insurance names in the morning trade after the president made some negative comments about the industry on Truth Social. We'll also go inside out on CoreWeave ahead of this afternoon's earnings. That stock finishing more than 20% lower in last week's trading. Let's just take a look at where things stand to kick off the fresh trading week, particularly off the back of the developments we've heard over the last 24 hours with the potential to end this government shutdown. We are seeing a nice pickup, a nice rally, particularly for tech stocks. Remembering the Nasdaq having its worst week since early April on Friday. So up almost 2% of trade right now. The S&P 500 reclaiming 6.8 now. We're up 1.1% on the benchmark. The Dow Jones also 0.3% higher. And the Russell 2000 also participating in this rally. We're seeing that 1% higher as far as the small cap trade is concerned. Let's just take a look at how foreign markets are faring right now because, of course, Asian equities, the first reactors, of course, to this development around the government shutdown. The Nikkei 225 powering ahead to the tune of 1.3%. The Hang Seng Index over in Hong Kong up 1.5% higher off the back of some encouraging inflation numbers out of China as well. I'll get to that a little bit later on. But for now, European markets doing this. We've got the German DAX up almost 2% and the FTSE 100 also 0.9% higher. So it looks like we are seeing an update across the global equities very much off the back of this news. Let's check out futures products. We've got the 10-year yield ticking up to 4.11 right now. The US dollar index is at 99, just fractionally lower this morning, which does mean that gold is catching a bit of a bid, 2% higher. We're at 40.95 right now on the precious metal. Crude oil just pulling back a bit there. We're at 59 bucks a barrel at 0.2% lower in the session off the back of some of this news. And Bitcoin is rallying this morning, catching a bid there after really struggling to gain some momentum in recent weeks. We're at 1% higher at levels of 105,000. That's your setup for this Monday. Let's get to Kevin Green, senior markets correspondent, who joins me now to get across some of these headlines. And obviously we're learning about the developments around the potential for the shutdown to end. What does this mean for the markets, KG? Because I feel like we've been speaking over the last month how investors have largely been looking past some of the worries, but last